Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. I've been wanting to have him on for a very long time. Been following his work really since he came out with a documentary about naked short selling. And, it was just so investigative. He was willing to talk about things Wall Street was not willing to talk about. And working in the financial services sector, it was a breath of fresh air. He's an American entrepreneur, an e-commerce pioneer, and CEO and chairman of Overstock.com, which is a very popular online retailer which has a market cap over $400 million, and they have over $1 billion a year in sales. He released in 2005 a popular documentary about naked short selling, which shocked Wall Street, and he has a very popular investigative journalism blog about corruption on Wall Street called Deep Capture. And he's also a Bitcoin entrepreneur. His company Overstock was one of the first major retailers to accept Bitcoin. So thank you for joining us on a Wall Street for Main Street podcast, Patrick Byrne.
Jason, I'm honored to have that you'd have me on. Thank you very much.
Now, Patrick, let's talk about Wall Street. You've been called the most hated man on Wall Street before. Do you think Wall Street has always been this immoral and corrupt, or do you think Wall Street's rent-seeking parasitical behavior has grown a lot since maybe 1971 when the U.S. dollar became a debt-based fiat currency?
I think it's definitely grown. I grew up, at the risk of being guilty of, call it creeping old fartism, I grew up around Wall Street, and I know what it was like. I knew what it was like in the 80s and the 90s, and I was in and out. My brothers worked there. My pop was involved with Wall Street, and I just had lots of reasons to sort of be visiting Wall Street over the years. I worked there for a year in the early 90s. When we went over, but I wasn't around it for about 10 years. In 2002, Overstock went public, and when you're a public company CEO, you tend to be out there in the mix. You're out there with hedge funds and prime brokers and the investment banks and everything. And it became really clear to me that there was a lot of criminality going on. People, in part, asked me to take part in it. And it was really quite easy over the space of a year or two to kind of surf around and just keep your ears open, kind of pick up how it was working, how the games were being played, the massive inside trader network that was centered and run by a constellation of hedge funds centered on Stephen Cohen. I mean, you had to pretty much, you just tripped over it everywhere. And they asked me to take part in various ways. So I knew there was a lot of criminality going on, and I got in, and I think that it was categorically different than how it would have worked 20 years ago. Basically, people who would have stood out, this is the creeping old fartism, but people in the 1980s on Wall Street, if somebody was sort of an obvious crook, they would have stood out like a sore thumb. That's become, I don't want to say the standard, but they don't stick out like a sore thumb anymore. It's quite obvious. Everybody knows who they are. There are scofflaws. There were, at least by the middle part of the last decade, there were absolute scofflaws operating on Wall Street. And they sort of made it clear to me, for example, when they asked me to take part in an expert network system. And they said, we have clients who are hedge funds, and they'll pay $2,000 an hour for the right to pick up a phone once a quarter and call you and ask you questions about the industry. Well, obviously that sounds like, just ripe for getting inside information. So I said something like sarcastic, like, oh, I assume that I won't be asked any questions about my own company, right? Haha, thinking 20 years ago, somebody would have answered, even if they really did have evil intent, they would answer, oh, of course not, we never do it. This time, people would just answer and say, hey, what you talk about with the hedge funds, your own business. I mean, they were just opening the door. So they were opening the door to taking part in criminal behavior. And it was all kind of with a nudge and a wink. It was so blatant. That's what freaked me out. It was so, they didn't even have the courtesy. It reminds me of when I was a kid, I lived in Vermont. I used to hay with my brother. We used to run this hay business. And then at the end of every day haying, we would ride on down to this local tavern. And there was this guy named Paul that ran the local tavern. And my brother and I would generally be the first guys in, sitting at the bar, drinking our Budweiser ponies. And Paul would stand behind the counter, the bar, with no one else around. And as he was talking to us at the end of every day, he would be pouring his rail liquors, which is to say the low-quality liquors, opening up the shelf bottles and pouring the rail liquors in. And he would just do this in front of us, talking to us and such. I remember one day my brother said, Paul, I'm pretty sure that you're not supposed to be doing that, but I'm really sure you're not supposed to be doing it in front of us. So,
yeah, you can lose your liquor license doing that now.
Yeah, well, I'm sure you could then. But the joke, to me, that's what these things were. It was so clear by 03, 04 what was going on Wall Street, and they didn't even have the good grace to hide it. It was all, I'd say, a nudge and a wink, but there wasn't much of a nudge and a wink. It was so blatant. So anyway, sorry I got on my high horse, but yeah, I think that it is categorically different. What happened really in the 1970s was the organized crime discovered Wall Street and started moving into Wall Street. And they were a peripheral factor in the 80s and the 90s. But by the late 90s, they've become a significant player. And there's a very blurry line between the world of organized crime and hedge funds. And there are some hedge funds that are nothing but fronts for organized crime. And they've taken a bunch of techniques of organized crime and moved it into the world of high finance. So it's a different place than it was 20 years ago.
Yeah, I saw your presentation about that in one of your long videos from the movie Goodfellas. It was really interesting with Michael Milken. But yeah, you mentioned plausible deniability there with the guys arranging things and then getting paid a commission. It just seems the level of morality has drastically fallen down because the initial purpose of Wall Street, right, it was to fund productive businesses on Main Street, right, and create jobs and grow and create value for the real economy. But, after 1971, the economy just became so financialized. Fiat money, the derivatives market exploded. It became a casino. And, the bank profits, the financial sector makes a disproportionate amount of profits now compared to the rest of the economy, it seems.
Right. Back in the early 70s, it made about 10% of U.S. corporate profits, 10 to 15% were made by the financial industry. Last I checked, that number was about 40%. Now, that was around 08. I don't know if it has stayed up there. Probably has. It's done quite well.
They're getting free money. Yeah, I'm sure it does.
It's great when you're in the business where your supplier is the government and they charge you zero. It kind of takes the pretense out of it. So I would say, anyway, back to your point, some of the change was in 1971, but I can't believe I'm going to say this because I hope I'm the least gentlemanly. I am not part of the old boy network. I could be part of it. I don't like them. Don't like the people. Never have. But I guess there's something that could be said for it. Because if you went back 20 years and through all the history of Wall Street, there were powerful players on Wall Street who I think knew, maybe they weren't any more ethical, but they probably knew that they were really peeing in the soup if they let Wall Street get completely corrupt. And there were just sort of some old guys who kept order, the tough old guys, the Ken Langones. There's still guys like Ken Langone or John Goodfriend. He's not a player anymore, but there were people like that I think kept a little bit of order in the bordello. They understood that if the bordello got too raucous, it wouldn't be good for business. Those players aren't there anymore keeping order on Wall Street. They're just not there anymore. So,
yeah, and it seems the politicians on both parties are essentially, bought and paid for, and the regulators are either asleep at the wheel or other things. That brings me to my next question. You made a documentary, which I watched, and I recommend our listeners watch it too, about naked shorting because your company was being unfairly targeted. How prevalent do you think naked shorting is for companies, and why won't the regulators do anything to stop naked shorting or some of these other crimes and corruption that you've mentioned already?
Well, I can say in the middle part of the last decade and up to 08, it was quite prevalent. It was routine, and it was easy to do for the hedge funds, and there was really a very interesting scheme that dispersed culpability. So there wasn't sort of one pair of dirty hands. There were a bunch of dirty fingers scattered everywhere, and everyone could claim to be just inside the law, but collectively, clearly, there was some illegal act going on. I don't know, after 08, so up until 08, it was, as you know, I was derided, even though there was absolutely incontrovertible data supporting that this stuff was going on. I was derided. Then 08 came and it started happening to the big banks, and the SEC passed this emergency order stopping the thing that they had been insisting for years couldn't occur. But they stopped it only as regards those 19 Brahmin financial institutions who incidentally were the ones doing it to everybody else. So it was really as backwards as you could get.
Sounds hypocritical to me, Patrick.
Yeah, it was Kafkaesque. However, I think since '08, there has been a gradual tightening of the rules in some areas. I think that it may have just shifted. The illegal acts may have just shifted into the world of ETFs. One thing that the government is extraordinarily opaque on this whole subject. And if they were clean and the system was as clean as they want us to believe, it'd be no issue at all to make it transparent, but they won't do that. The world of ETFs is, I think, where naked shorting has gone. I say that only because it can. And the rules the rules are always a step behind the illegal behavior. So it's not illegal to naked short an ETF. And so that means that if I want to naked short your company, let's call it Jason.com, all I've got to do is go get, Michael Steinhardt or the guy who creates ETFs to go create a basket of stocks. Let's say an ETF, exchange traded fund, is just a basket of stocks. So I get somebody to create an ETF that includes, as it's one of its, say, 5 stocks, Jason.com. Then I go out and I naked short the ETF, but then I go and buy one share of each of the other 4 stocks in your basket, but not yours. What I've therefore done is create a synthetic naked short position against your stock, and it's not clear to me that would be illegal. And there is some evidence that is gone on a large scale. But truth is, I really stopped following the issue once '08 came and the collapse happened, and the SEC came out with the emergency order that did exactly what we've been telling them for about 4 years they needed to do, and that they had been denying, was needed because it wasn't possible. I kind of felt so vindicated. I haven't really kept up on the details because for me, really, naked shorting was just the facet that I got to look into to see the heart of Wall Street and see what was going on. And that included things like regulatory capture and the prevalence of organized crime and such. And so the naked shorting issue itself was really just something I set aside. I felt that we had clearly won the day intellectually and with the regulators. But to me, the deeper issues are what I stay more concerned with, primarily the capture of our regulatory system by the criminals.
Yeah, I think you did great activism there with your documentary and putting it out there, and then, other people picked it up and did their own research and shared it, and, you don't have to do all the heavy lifting. You did enough heavy lifting to get it out there to the marketplace that this is what's going on. Other people need to watch this, and I think other people have, carried the torch and helped you out with that. My next question is, I've heard you comment in speeches before, you think gold and silver are manipulated. Do you think this manipulation will eventually end, and do you think most markets now are manipulated?
Well, I do think that there's an awful lot of rigging. I mean, what's the common denominator of so much that has come to light in the last 6 years is how many of the markets are rigged, from the LIBOR fixing scandal to naked short selling in equities to gold and silver rehypothecation scandals, U.S. Treasury instruments. U.S. Treasury instruments are the rehypothecation of U.S. Treasury instruments is the lifeblood of the shadow banking system. And those instruments are rehypothecated on average 2 to 3 times, which means for every actual Treasury bond in existence, there are 3 to 4 people or hedge funds or pension funds who think they own that bond. And
bad collateral, right?
Say again?
Yeah, bad collateral, it sounds like.
Yeah, well, you have recollateralization. It's something that doesn't, the quants and the EMH guys will say it doesn't make a difference because it just it acts like a tracking stock. And it all comes out in the wash and it doesn't make a difference. They're true most days, but in times of systemic risk, it makes a difference. It happened in the mortgage-backed security crisis in '08 when it turns out there were a whole lot of bonds issued, mortgage-backed securities issued, that allegedly were say, stuffed with a bond might be stuffed with 1,000 mortgages, but really maybe 200 of those mortgages don't exist. They finished doing the paperwork to issue the bond before the appropriate number of mortgages had been completed, and the bond was issued with sort of this filler material on the assumption it would be cleaned up later, and it wasn't. So if you remember in 2009 and 2010, you started hearing about these cases where there'd be a foreclosure hearing in some courthouse in Tampa, and 3 or 4 different parties would show up with paperwork saying that they owned the mortgages on some set of houses, and the chains of title had gotten fuzzy. This was written about as if it was all just this paperwork crisis. The mortgage-backed security guys got behind on their paperwork, and there was this slop. But I don't think it was only that. There was evidence that there had been basically overselling of mortgages, and the American Banking Association estimated that I think it was 18 to 30% of the mortgages in the mortgage-backed securities didn't exist, which meant that you had properties where you had multiple people thinking that they owned the same property. And so the same thing when it goes on in stocks is naked short selling. When it goes on, it's going on in gold. There's far more. You've heard about the gold rehypothecation scandal. There's far more people who think they own gold than there's actual gold out there. And it'll keep working. You know, the game of musical chairs keeps running as long as the music keeps playing. But I think it's a very bad way to run a railroad.
Yeah, I agree, and that's why, for insurance purposes or savings, I don't consider it an investment. I just buy metal and I take it out of the system. I don't want any counterparty risk. I just, store it myself, or I store it with someone who allows, annual audits and things like that. So I think that's really important. That people think, they own gold in GLD or SLV or some other type of unallocated account, and they don't really own the metal. They just own a paper certificate or something.
Yeah, the people they're hilarious to me. The people I know who say, gosh, I don't trust the system anymore. I'm buying gold, getting my savings into gold. Oh, where are you storing your gold? Well, I have GLD, or I've got these certificates from my bank. They're not getting the joke that if that day comes, there's going to be some of us who actually have, gold in a box, and some people have pieces of paper from JP Morgan. And guess what? They sold 100 pieces of paper for every actual ingot of gold they have somewhere.
Yeah, exactly. And David Morgan, who's silver-investor.com, he talks about how basically like the paper markets, the commodities markets, it's like a showroom for Tesla, where they have one silver bar on the contract and they don't have any inventory, and then if you want the inventory, you got to wait a long time in order to get what you want. And it's all the rest of it's just paper, like you said. It's just it's not the way it's supposed to be. They're supposed to have the inventory. They're supposed to have the metal, but they figured out loopholes in the law, or they've rewritten the laws and the prospectuses for these ETFs, and most people don't even bother reading what they've invested in.
Even GLD, I know that they claim that they have 1 ounce of gold for every ounce that is represented by their paper ownership. I saw some calculation, I think it was on Zero Hedge, where somebody just proved how wildly impossible that was, that there's no way that they're 100% reserved.
Yeah, I mean, they keep changing the rules for GLD, and they don't even allow redemptions now. Even if you're a hedge fund manager, but you're not part of the bank's crony network there, you're not allowed redemption. So there's been a couple hedge fund managers I know trying to redeem $12 million or $50 million worth of metal from GLD, and they've been denied by the banks.
They're trying to redeem in the sense of they're trying to get the actual physical gold? They
have the shares. They have the $12 million worth of shares, which is the minimum, and which I think you need 100,000 shares, which was $12 million, I think, at one point. And they tried to redeem, and they were denied. So because the banks have rewritten the laws for GLD, saying, you can't take them out. The banks basically use GLD, in my opinion, for to put out physical demand fires. So if there's too much demand out of India or China, the banks just raid GLD, take the metal out, and ship it there for big premiums and make fast money that way. I actually, a hedge fund manager friend of mine, read a newsletter, and the guy was adamant that Wall Street was raiding GLD and was selling gold on the black market in India for $200 an ounce premiums above the spot price last year. A lot of it.
Wouldn't surprise me. The same thing, incidentally, was happening in stocks. In our stock, for example, I have these emails. I think I published them at some point. where I went out and bought 50,000 shares of stock, and I try not to make this about overstock, although it was a nice sort of experimental lab to figure some of this stuff out. Went out and bought 50,000 shares and asked for delivery. Delivery didn't come, kept checking on it. Finally started getting emails from some young fellow at the brokerage. I felt bad for him. He was like 24 years old and he didn't really know what he was saying. And he said, look, I'm going around to the people on the trading desk and they say there are no deliveries in overstock.com anymore. No shares are getting delivered. It's considered a hot stock. So there aren't.
Okay, so Patrick, you were telling our listeners about the problems with even direct registering shares, how the system, the plumbing of the stock market now behind closed doors that the average person doesn't see, it's not set up anymore. How everything's basically in street name only now.
Right, and so I had this point last year, in the last decade, where I had bought 50,000 shares of stock in my own company. And was trying to get delivery just to kind of see. And I was getting this gobbledygook answers from some young guy at the brokerage who didn't know what he was revealing in his emails. And he ended up saying, oh, I'm talking to my traders, and they all say that this stock is a hot stock and there are no deliveries possible, but we can keep buying more for you. How much more would you like to buy? But we just can't get any delivery. And it was so fun. I mean, to anyone with some basic economic knowledge, that was a nonsense answer. A price is a packet of information about value and scarcity. And to say, well, this is the price of something and I can buy it for you, but I can't deliver it to you is nonsense. You're not buying anything. It doesn't mean anything. And what it really comes down to is because the property rights have gotten in these different things. You're talking about gold or U.S. Treasury instruments or stocks, whatever. The system of property rights has gotten so much fungibility in it and fluff in it and fuzziness. It means that it is possible to create more apparent property rights than there are the underlying properties. And the effect of that is to change this equation. If a price is a combination of value and scarcity, and you can reduce scarcity by magically creating new rights, then the price is no longer a real price. It's no longer a piece of information telling you some fact about the world. It's just
Exactly. It's no. I think what you're trying to say is there's no real discovery. Then it's not based off supply and demand. If they can create whatever supply they want to out of it, basically.
Right. And a guy from the Austrian school will get that. The problem with most finance guys is nobody's taught them economics, and they don't understand. I swear, these finance guys. Remember, Warren Buffett said that a guy with a PhD in finance is just a guy who learned how to sit in a room and talk in Greek letters for 4 years. It doesn't, they don't understand, there's opportunity cost to everything. There's no free lunch. And if they come from the world of finance, they typically think everything's about liquidity. And the more trading you have, the more liquidity, the better price discovery, God's in his heaven, this kind of stuff. But if you say from the Austrian school, you tend to see things more in terms of supply and demand. And yes, I think most stocks most of the time do follow the rules of EMH, but there are certainly opportunities where at times where stocks behave more like a commodity, like potatoes, and supply and demand is what sets price.
Yeah, I don't really believe in efficient market hypothesis because you can't really be a value investor like Warren Buffett says if you believe in efficient market hypothesis. I think the markets are mostly based, on human nature, especially in the short term, and for many years they just oscillate between, fear and greed. And the valuations for a lot of stocks are based, on greed or fear. If people think that, like, you have valuations for Tesla and things like that, they hardly have even shipped any cars, and yet they're being valued at the market caps of some of these humongously large auto manufacturer. So I mean, like, I don't think that justifies EMH in my opinion. But anyways, though, that's just me going off on my soapbox. Anyways, though, Patrick, you made something really important in your speeches at Bitcoin conferences. You talked in your speeches about how the individual American is losing their freedom and how there's been a major intellectual battle for hundreds of years between freedom and tyranny. Are things going to get much worse in terms of Americans losing their economic freedom and liberty before things get better?
Well, I would have said yes, but I think that severe crisis is on its way. 2008 was the hors d'oeuvre. Nothing got fixed. There are much deeper systemic issues that go way deeper than Bush or Obama. It's not about them. Both of them had opportunities to fix things, but they haven't done anything. So what happens when the crisis comes? Maybe it's a chance to rethink a lot of these systems. I think that the whole crypto revolution it's amazing that it's come along just in this point in history, because it's just when we need it. Because the crypto revolution lets us revisit decisions that were made in centuries past about how the financial system is going to work, and really fix things and really solve a whole lot of the issues that I've been talking about. It's just kind of an amazing coincidence that has emerged right in this moment in history, right when the current system is, I think, meeting in its death rattle. At this point, the stock market going up doesn't mean anything. You have 93% of U.S. Treasury instruments issued this year, last I checked, were just bought by the Federal Reserve. So there's no one buying our stuff anymore, our paper. We're writing a check from one pocket, putting in the other, and going out and think we're rich. So that system is reaching its crisis. And they stated, Ben Bernanke, people seem to forget this. Ben Bernanke, at the introduction of QE3, justified it on the wealth effect, on that it would create rising asset prices in real estate and the stock market, and then as people felt more wealthy, they'd go out and spend more, and that would keep the economy going. That would be the stimulus. Well, besides being an incredibly inefficient way to do it, and also a way that overwhelmingly favors rich people, it's exactly what was going on in 2007 in the housing industry. In the mortgage market in 2007, there were $1.4 trillion of refinancings. People's home, in other words, had gone from $500,000 to $700,000 in value. They went and borrowed $200,000 more against it. And maybe it's somebody making $60,000 a year, but they borrowed $200,000 and they think that they made $260,000 that year. And they went out and lived like they had made $250,000. Well, of the 1.4 million in new financings, $1 trillion was spent. So that was $1 trillion on a $15 trillion economy in 2007. That really means that 7% of our economy in 2007 was just foam. It was just this layer of foam that really didn't reflect any actual economic, savings, investment, production. It was just this bubble that people were borrowing money against. And so anyway, that strategy of creating a wealth effect and then getting people to borrow, of creating a wealth effect and then expecting people to go out and spend, and that's what stimulates the economy. Besides all the other bad things that can be said about it, that's not the solution. That's the disease itself, and that's what brought about 2008, the crash that's one of the reasons that brought about 2008. So our QEs are nothing more than playing that game all over again. And I think that is going to end the same way.
Yeah, and the name of the game has been, like you said, to get people into debt, but people don't need debt. They want a full-time job. They want savings. They want to produce more and save more, but the opportunities are just not there because there is inflation in the system for food and energy and things like that. And then you have, in your speech with Freedom and Tyranny, our listeners should definitely go watch a few of those at some of the Bitcoin conferences where you talk about the importance and the battle between this. You have, the Edward Snowdens, the whistleblowers who are coming out saying, the government's recording all of these conversations, the Skype conversation, everything like that. But then you have the internet and you have Bitcoin and you have things that could potentially liberate people and give them more ability to transact and talk to each other and eliminate taxes and things like that. So we're at a really interesting tipping point here about, between tyranny and freedom, and I think your speeches provide a good insight into that. I want to talk about Bitcoin in the remaining part of the interview because you're very associated with it. You're one of the first major people in the retail industry to talk about Bitcoin. What got you interested in Bitcoin, and why did you decide to be one of the first major companies to accept it?
Well, in a previous life, I studied the mathematics that underlies cryptography. And so 3 years ago, when I read a Wired article or a Fast Company article, just a short article about Bitcoin, I thought, gee, I recognize that stuff. That's the stuff I used to study 25 years ago. So I was kind of tuned into it, but I wondered what the government was going to do. And I didn't really invest any cycles in it on the assumption that the government might well outlaw it. Well, it came from so out of left field that they didn't really have any way to outlaw it. And last November, there was a hearing in Washington in front of the Senate, and a bunch of different regulators got up and at least, if not greenlit Bitcoin, they said they weren't going to red light it. They said we don't see any reason that this should be illegal, or we can say that this is illegal. So because they did that, I only then did I get interested enough to really give it some thought. I thought, well, probably in a year or so, by the end of 2014, we'll go ahead and implement it. I mentioned that on December 19th of last year to a journalist. And before I knew it, that mention, I saw over the Christmas break, it was popping up in blogs in Korea and Japan and Africa and stuff. Everyone was talking about that. We had said we might adopt Bitcoin. So from that, I deduced that there was a much higher level of interest out there than might be readily apparent. We found that getting live really just took a week. It was an intensive week, but we got some developers stuck in a room and slid pizzas under the door for a week. And after a week, we were integrated with Coinbase and we got live. And since then, there's been a tremendous awareness. I mean, the amount of awareness this has given globally to Overstock is something that is worth a fortune. So far, the sales are still, pretty de minimis, less than 0.25%. But I expect that to change. The number of wallets are still growing. People just, everything is like this, and it's adoption. They have adoption curves, and we're just at the beginning with Bitcoin. And I think if there is a crisis, you're going to see people moving into Bitcoin quite quickly.
Yeah, and you've talked about also the future innovations you see with Bitcoin and the blockchain. What other types of innovations and disruptions do you see into other industries coming from the blockchain technology?
The financial industry. The financial industry is incredibly ripe for disruption. Everything that's being done on Wall Street with equities and bonds and derivatives can be done in a parallel universe based on the blockchain, where you don't need massive central institutions to do your clearing and represent you into the marketplace as such. We can go back to a world of peer-to-peer voluntary exchange of value, and we don't need it to be mediated by these central institutions that we don't trust anymore. So that's disruptive.
That would be great for me. I'd like to see that where, the Wall Street banks aren't getting all their fees and cuts and commissions. I told you I was a stockbroker for a while before that, and the name of the game there is to not, especially at a lot of large firms, the stockbrokers are not really honest with their clients. I mean, they appear to be honest, but the name of the game is to sell the highest commission junk there that, a whole bunch of different layers of fees and commissions and all these things are attached to it, and that pretty much describes most of Wall Street.
Yeah, well, nothing's ever, on Wall Street, nothing's ever bought, it's sold, right?
Yep.
Everything's about putting lipstick on the pig and selling it to the rubes. It's amazing.
Yeah, and I think anything that can, bring a higher quality product at a lower price, I'm in favor of. You recently invested in a blockchain technology company. Can you tell our listeners more about the company and what it's trying to accomplish?
Sure. Well, I mentioned in that speech in May at Bitcoin in Amsterdam, that we were interested in being the first company to issue a crypto security. I started hearing from groups around the world who were working on that project. There was company called Next. There was Ethereum, 13 of them. Spent the summer sort of vetting them and figured out a month or so ago, made the decision to go with Counterparty. What I like about Counterparty is it was founded less than a year ago by three fellas. They're not Wall Street bankers trying to come up with a proprietary version of Bitcoin that they can make $1 billion off. It's some young idealistic fellows. They all studied math and philosophy and computer science who are trying to do the right thing and stay true to the Bitcoin philosophy and transparency and open source development and such. So, and they also had quite a head start, it seemed, on the other people trying to do this. So we gradually got to know each other over the last couple months, and I ended up hiring 2 out of the 3 of them have come in to Overstock, along with a seasoned Wall Street veteran to act as sort of the adult supervision. So we've got the technologist, we've got a fellow who has built exchanges, built an ECN, built an alternative trading system in the conventional Wall Street world. So he'll be the perfect guy. Well, the 3 of them are forming a troika. And then we're building under that team a team of probably about 12 people. So it'll cost, say, $2 million a year to maybe double that to build out this. Basically, we want to build this alternative universe, this parallel universe that can do that, in which one can do all the things one does with the institutions of Wall Street, but one can do it in the world of crypto and won't be subject to the market rigging and won't be subject to the various games that get played on Wall Street. It's a truly fair. They can't cheat the laws of mathematics. You can't point a gun at the laws of mathematics. The regulators can't send subpoenas and browbeat the laws of mathematics. And so I trust the system that we're going to develop much more than I trust, the system that Goldman Sachs owns.
Yeah, it sounds a lot more transparent. What's your timeline for this? Do you think 5 years, 10 years? How many years do you think it's going to take to get this thing up and running and maybe get a network effect going where companies are listing on a blockchain type of exchange or we're trading stocks or currencies on a blockchain type of exchange?
Well, I put it this way, in the absence of there being a government, I think we could actually have this built by February. By February, now, then you add in what we need. Once we have the platform technologically built, we're going to need government approval. And so how long does that add? Well, especially given the people that we have to please in government are people who, are people that I believe are shoeshine boys for Wall Street, for the people who are going to be disrupted by the technology, and B, whom I have publicly been calling shoeshine boys of Wall Street for about a decade. So there's not any love lost between me and the SEC. But we may find a way to work through this. I think they understand, well, I actually think that they're going to let this happen, or at least they're making noises, that they're not going to stop this. And so we can get our piece done in a few months, add a few months for working with the government and getting regulatory holy water sprinkled on all of this. Then we get our stock live. Then we start going out to other companies. I would imagine it's going to take 5 to 10 years to really disrupt the financial industry. But I think that this can really it's a dramatically different alternative, and we can price it. I mean, it's going to be almost free to provide, which means we're going to be able to price this. The classic disruptive model is you price a product that's 80% as good for 20% of the price. Well, I think we're going to be able to do that.
Yeah, I'm excited. And so your company there and then Mastercoin and UltraCoin and some of the other it's just real exciting seeing all this come to pass, and hopefully the government doesn't try to do too much. My last couple of questions here are Bitcoin related and also freedom. Do you think the U.S. government and other governments want a cashless society so they can monitor all of our economic activities and also tax every one of our transactions? Because we hear a lot of people say that Bitcoin is a conspiracy theory, the NSA or CIA created, and that they're just going to copy the technology, and then government's going to be able to track everyone's transaction and lap on extra taxes for transactions. Do you think that's the future, that we're we're going to see based on crypto technology?
I don't think so. First, I think that 90-some% of transactions are already electronic. There's no paper involved. And I don't think this was created by anybody in the government. I think that this is a really far out technology somebody came up with. It's out of left field. And normally the government's their inability to respond to things quickly is a point of consternation for me about the government. But I actually like it this time, because I think that if they'd really had their wits about them, they would have strangled this in the cradle 3 years ago. But now that it's out there, it's developed, there's millions of people with the wallets and who know what's going on. I don't think that they can stop it, but I don't think this was started by them. I don't have any reason to believe that. If anything, I'd find it shocking because it's going to be so disruptive to the oligarchy, so disruptive to this class, the financial class who hijacked our republic, that I don't think that this would ever have been done on purpose.
Yeah, and I think Silicon Valley is backing this now, too, and they're putting capital, and they have their contacts for lobbying and stuff like that. You're seeing Mark Andreessen spend a good amount of lobbying dollars in D.C., the D.C. metro area where I live here, to promote Bitcoin to the regulators and to Congress people and things like that. So now, once Silicon Valley, is backing it, it's going to be tough then for the government to do that, because Silicon Valley is one of the largest job creators in the country still.
Right.
Now, my final question, Patrick, is recently the Chinese government attempted to ban any Chinese citizen from using Bitcoin, but it has not worked, and many Chinese are using Bitcoin to get out of the RMB, move into Hong Kong dollars or gold or other types of currencies. Do you think governments want to ban Bitcoin usage, and do they have the ability to do so without shutting down the internet?
Authoritarian governments want to ban Bitcoin usage. Really, Bitcoin is very tied up with the whole cause of limited government. If you want limited government, you want a limited money supply that the government can't just manipulate and create out of thin air. If you're so for unlimited governments that want to be infinite and don't want any checks on their power, they would be well served to try to stop Bitcoin. But stopping Bitcoin at this point is, I think, like trying to stop the wind to keep the tide from coming in. I don't think that they can stop it.
Yeah, I don't think they can stop it either. I've watched good discussions from a lot of Bitcoin experts, like from Brock Pierce and Trace Meyer. I've interviewed Trace Meyer, and I've had other Bitcoin experts on our podcast show too. And they tell me basically that it's near impossible to completely shut down Bitcoin without basically shutting down the internet. But they compared the analogy to a freeway. And they said you can't really shut down the freeway right now without shutting down the internet, but you can make it harder to get on the on and off ramps, to get on the on ramp or off the off ramp and things like that. And that's about all the government can do, maybe with more taxes, what you're seeing in the U.S. I guess, every Bitcoin transaction like in the U.S., you're supposed to report it before for tax purposes, right, for capital gains. So it's kind of ridiculous, like in that sense.
Right. Right, but it's an idea whose time has come, and it's helped by the fact that the system it's competing with has, I think, reached the end of its own life cycle. It's been so bastardized, it's been so corrupted, in so many ways. The system, they can't even track who owns what anymore. So that system is falling apart on its own. So maybe we've just gotten lucky historically. The factors that are going to make, there are definitely people who would want to stop Bitcoin, but the current system is failing so badly, there's not going to be an alternative. When the dollar collapses, loses its global reserve status, of course, Russia and China are trying to get a brick basket of currencies as some alternative to the dollar. The U.S. is going to push for the IMF to issue the new global currency, special drawing rights. That will be but hopefully the public's going to be smart enough. We've jumped from one fiat currency. Do you just want to jump to a bigger fiat currency, or do you want to get out of the fiat? Are the problems that we're seeing intrinsic to the whole fiat currency game? And I think that the plan has been that when the dollar crisis comes, the U.S. is going to try to push the world onto this SDRs from the IMF. And I think that if Bitcoin has emerged and has gotten, few percent of the market, there's going to be a lot of people saying, hey, why go to another institution that is subject to all the problems that we've just seen destroy the U.S. dollar? Why go to a more global version of that? Let's go get away from fiat currency into something solid like cryptocurrency. So I'm actually quite optimistic. I think that in 7 to 10 years, it's all going to be over. I was around, unlike Al Gore, I wasn't there right at the creation of the internet, but I was around shortly thereafter. And we knew that we were doing something as big as the Gutenberg Bible, that it was going to change humanity that much. The people who are involved in crypto, I don't want to sound like we're breathing our own helium here, but there's a sense that this is going to be bigger than the internet. That what this does, this changes the rules of a game that has been around for 800 years, the way finance works. And it could be a bigger change for society than the internet itself.
That's some impressive types of upside there, and I think personally that Satoshi Nakamoto should win the Nobel Peace Prize. But the way the world is set up with economic and political elites and the status quo that he's threatened, it's good he didn't come forward to take responsibility for his creation here, because he'd probably be in jail on some sort of trumped-up charge like Charlie Shrem or some of the other guys that are involved there at this point. So, we're in a world where incentives are – I talked about this on our podcast, where incentives are essentially at all levels of society perverse. And where, someone comes up with an amazing invention and that could change the world and make it better, and then, they're thrown in prison. So
well, I'm not sure that I don't end up there someday. I know that I've ticked off a lot of people in Washington, and I'm constantly alert. I took up yoga in the last few years because it's the only sport you can do in a jail cell. I figure if I'm going to end up there, I want something I can do to keep fit.
Well, you're definitely an activist on the side of truth, Patrick, and this was a great interview. I want to thank you very much for your time. Please tell listeners more about your Deep Capture website. And the charity you work with, and Overstock.com.
Okay. Deep Capture is a site set up in the middle part of the last decade to investigate Wall Street and its connections to Washington and to understand what was going wrong in our system. Deepcapture.com has won various web elections as the best site on corruption in the U.S. and the best site on business investigative journalism and things like that. I do a lot of the writing myself. There's a couple professional journalists who are also involved. My great passion as a charity is school vouchers. I'm the chairman of the Milton and Rose Friedman Foundation for School Choice. I think that the two things we have to fix in our society are education and Wall Street, i.e. the system of creating human capital and the system of marrying human capital and financial capital. So it's education and Wall Street, and the only way to fix Wall Street is to drag it behind the barn and kill it with an axe. The only way to fix the education system is to reorganize it so it's not top down, but it's bottoms up. And families, and parents, and children are given a choice about where to get their education. And how you do that is you give them vouchers. So that's sort of my big charitable push. And anybody who wants to support the Milton and Rose Friedman Foundation for School Choice if you want to, don't send flowers, support that organization.
Yeah, and you have Overstock.com too, which is obviously accepts Bitcoin now as one of the very first. So, Patrick, I just want to thank you very much for your time. I really enjoyed this discussion, and hopefully we can have you on again soon, because you just know so much about the capital markets, and you're definitely like one of the most exciting Bitcoin entrepreneurs out there, and I'm happy I got to speak to you.
Back at you, Jason. I look forward to talking to you again.